What's the most important investment skill? Is it to be the smartest? Is it to have the most information possible? Is it to have a lot of money? It really is all about psychology in the market, especially when there is a downturn or a bear market happening. So today we're going to talk about 5 things that you can do to stay cool in this type of environment that we're in right now, and to, keep reassuring yourself and not selling out of your positions. So let's get right into it. So the first thing I've wanted to mention is, and I've got a graph for that too. Basically, what you can do is read some books about investments, because there's a lot of smart people, a lot of successful investors like Peter Lynch, Warren Buffett, and they've all gone through times and times of downturns already. So if you look at, I pulled up a graph here from 1870, and then you can see that there's been all sorts of things like sicknesses, wars, panics, depressions, inflation fears, wars, um, and so many things that made the market go down. But if you zoom out of it and you look at it from last 150-year perspective, you just see a straight line up pretty much. But if you were caught in the moment of, oh my God, this is going down here, and this might have gone on for a 1 year or 2 years period, and if you don't have that bigger picture and you can't reassure yourself, you might have sold out of this. So my tip would be to read books like The Intelligent Investor by Benjamin Graham, um, One Up on Wall Street by Peter Lynch, or Richer, Wiser, Happier by William Green. It's a new book, which is a collection of all sorts of successful investors, and yeah, they actually explain exactly what you should do, and they've all been through it multiple times. And they, on the contrary, say that times like these, where we enter sort of a bear market, this is the time where you find most deals and where you make your most money in your life if you stay cool-headed. The next point that I want to mention is, go through your own investment thesis for whatever company you've invested in and reassure yourself, detach yourself from the news, reassure yourself that the company itself is doing well. So is my revenue growth intact? Is management performing as they expect, as they have promised us in the previous quarters? Listen to quarterly earning calls, for instance. Is net profit or free cash flow, is it increasing? Is it in the ratio that have set for myself based on my initial investment thesis? And based on that, you would notify that, or notice that everything is still intact. Everything is still going as expected or in line with expectation within a range. And just because the stock price fell doesn't mean that necessarily anything is wrong with your company. So it's very important to go through that. Even draw up a little DCF model. Have a look at Google how that works, just to see that the price that you're paying right now is really cheap, and the price you've paid already is also good. So yeah, this is the second tip. Number 3, take a step back from your portfolio and see how your individual stocks going down on a daily basis, and really have a look at the market. Is this a macro trend? So I mean, at the moment, obviously, it's all about interest rates, inflation fears. Now people saying we might head into a depression if they don't deal with it correctly. So that all of these stocks, and especially high growth, no income stocks, they're all getting sucked into this macro trend, and obviously get hit the hardest from all of them. So, but you as an investor can take a step back, because we've talked about point 2, your individual micro investment thesis for each individual stock is intact. Your portfolio is going down because clearly there's a macro trend here happening. So it's similarly to something that happened before in history. So if you were investing, during this period into a super successful business, or for instance, after the dot-com bubble, if you had invested in Amazon, you would have been pretty much going down, 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 down until you reach the bottom, and like 1 or 2 years time later, you would go up, you would still go down again to just to eventually go up. So even though you've picked a really good, successful, life-changing and disruptive company, you would have still gone through almost 10 years of no gains if you had invested in the, at the peak of the dot-com bubble. So if you take that back to today's terms, if you had invested in this hype growth phase that we had in February 21, and you've invested in Square, Teladoc, Palantir, and all these high growth names right at the top, then chances are you might be down for a while until this recovers back. But if your investment thesis plays out, then eventually you will make money once it comes back because you still invested into a great company. So all you really need to have is that patience, Okay, next point. Next point is think about investment as if it's a friend asking you to invest in his private company. And think about what you would do in that case. So let's say someone has a startup and he tells you to invest 10,000 into his startup and asks you, bro, I have this company and it's, this is like it's a disruptive company. I need some capital to push in. Can you please give me like your $10,000 as an investment? If you do that, you know exactly you're not gonna get that 10,000 back. You don't have that flexibility of getting it back tomorrow. You might never see it again. It's like a highly risky, investment as such. So if you do it if you compare your stock investments to that or to a purchase of a house, then just picture yourself investing in something that you cannot change tomorrow your mind on. So you have invested in PayPal, you've done your analysis. Don't overthink it. Don't rethink your decision next week or tomorrow and sell out and then buy something else and then sell out again and buy something else. Really make sure you've invested into the right thing, and then just keep holding it and give it time. Like the best companies might be down for 2 years in this market, who knows? But eventually they will come up, as history suggests. So good companies will always increase in price because they will be able to gain market share, increase net income, increase free cash flow, and their market cap will expand over time. You just need to give it time. Sometimes nothing happens and then all happen at once. Once there's this whole fear of interest rate is gone, it might all happen at once. So you don't know if it's going to be a steady upgoing. This one looks kind of steady, but think about it. It's years here in between. So you had these drops. Even if you had this little drop here, this was probably, a 10-15% correction. So in that moment, people are probably crying and selling again. So just really zoom out and think about it as if this is an investment that you cannot sell. Make it or not. And if you make it, leave it and let it play out for 2 to 5 years, I would say, at least. Next point. This is a really important point because I think that in times of bear market, in times of fear in the market, so if you look at right now, fear and greed index for investments, the fear and greed for investments is at a fear level. It's not even the extreme fear level. So there might be even more pain to come. But what I'm saying is, if you're in that fear mode, it's very common for people to follow some of those common biases that I've listed here, and then really make mistakes that they shouldn't have been doing. And that's why I was asking in the beginning, what's the smartest investor? Is it the smartest person? Is it the person with the most money? Not really. It's the person who can control himself the best, who's objective enough to see that, okay, there's a macro trend happening. Obviously, my stocks are gonna get hit. You prepare yourself mentally for it. You take the hit, which is all unrealized, by the way, if you haven't sold. So if you want to make it realized, then you have to sell, which is kind of, you know, that's the stupid thing to do at the moment. If you are down already 50% and then you say, okay, this is it, that's over. So this would be the loss aversion effect. So people don't want to lose, so they rather not lose than to gain more. So if they gained a little bit, they sell out, or if they lose a little bit, they also sell out because they're like, oh my God, I don't want to lose at all. But guess what? You're not really lost anything until you sold. If you're holding a good company, as I said, it's gonna go up over time. So you don't have to sell anything. Um, so this would be one common bias. The other one is the confirmation bias. So let's say you told yourself, oh my God, I think it's better to sell. You will look it up on Google. Should I sell now? And then you might get videos that just confirm your bias, just confirm your theory, because the way you're looking for it is to get an article or get a video that actually confirms, yes, you should sell. Like it's the best thing to do because there's only more pain gonna come and there's no way back. So, and this is the problem. You always have to stay objective. You always have to find the pros and the cons. Like you can't just look at one side of the equation. The same when you do your investment thesis. Like you can't just put in the numbers of some company you like, doesn't really add up. You change it a little bit, you make it work. You think, okay, well, it actually works. It's 50% get upside. I can invest in it. If it's not hitting your target, don't invest in it. Don't just, believe everything is gonna work out just because you like the company. And the same thing for a bear market. Just because you believe you're selling, just don't look for information that confirms you. Look for both sides of the equation. And then something that's not listed here is the herd bias, just following what the herd is doing. When everyone is buying in the market and everything goes up, everyone loves to buy stocks. It's crazy, like because people just think that, well, I have 10,000, I put it in. Oh my God, 1 month later, it's 11,000. So I'm gonna keep piling money in. Oh my God, there's Square, there's PayPal, all these growth stocks. I will pile the money in, my money will go up, and that's what everyone is doing, and everyone is a genius, and everyone has fun in the market because obviously making money is fun. Well, all you're doing is just following the herd and that kind of sort of momentum of investment. So people supporting each other get like rises let the stock market rise even further. But on the other side, if everyone sells, you also sell because you think, oh my God, yeah, whenever I put 10,000 in, next week it's only 9,000, it's only 8,000 worth, which is just not the way to look at it. You should look at your individual company and at whatever price it is. If it's an all-time high, all-time low, you want to put some money in, okay, you can wait if it's all-time high, you can wait if it's all-time low, but in your investment analysis, is that price, even if it's an all-time high, is that price giving me enough return based on my individual goals? If yes, you can invest. If not, you should wait or you should look for other opportunities. And this is all really, it is. You just have to buy good companies at very good or reasonable prices. That's all it is. Don't buy overpriced and don't sell underpriced, pretty much. So yeah, I thought this was important to talk about a little bit of the psychology of the investments because I think that's pretty much like other than finding the right company and keep investing into it or having that habit, I think the psychology of it is probably 60-70% of your success in the market. So if you can withhold those periods of bear market that we might head into, something similar like here where there's years of bear market, if you can withstand that, don't sell your investments, keep putting money in. If you keep putting money in by the downturn and it comes up, we put money in again. Well, imagine what your portfolio is going to be worth while you're hitting that spot here, where you pretty much made money on all of these purchases. So yeah, just keep holding, keep reassuring yourself, take my 5 points, go through it, see if that helps. Let me know in the comments if you tried it out, and yeah, also let me know in the comments if any other stocks that you want me to cover. So see you next time, guys. Bye.